Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. If you are looking to improve your trading skills and gain a deeper understanding of the market, then you are in the right place, okay? In this video, we're just going to be exploring the SMC trading strategy, which has become a game changer for many traders, right? Now, this strategy focuses on market structure, liquidity, and order flow to identify high probability trade setups. Okay, so if you want to learn how to master the SMC trading strategy like a pro, then stay tuned because we're about to dive in. And before we get started, don't forget to hit the like button and subscribe to the channel if you haven't already for more insightful trading strategies. Now, what is the SMC trading strategy? Right? The SMC trading strategy is short for smart money concepts, and it is all about understanding how large institutional traders, also known as smart money, move the markets. All right. So instead of relying on traditional technical indicators, the SMC strategy focuses on the structure of the market, liquidity zones, and the order flow that drives price movements. Now, by understanding how the market is likely to behave based on these factors, you can pinpoint high probability entry points and make more informed decisions. Okay? The key idea is that smart money moves the market by creating significant price swings. And if you can spot where these movements are likely to happen, you can ride along with them. Okay? Now, the goal is to anticipate price action based on how liquidity is being distributed across the market. And that's what we are going to break down in this video. Okay? Now that we understand what the strategy is, let's just break down the core components of the SMC trading strategy. Now, there are several key principles. There are several key principles that every trader needs to understand if they want to master this approach. All right. The first is market structure. Right? Market structure. Now, market structure actually refers to the general trend, okay? General trend and price action patterns that form in the market. All right, that's what we call market structure. This can be identified through, higher highs, that's in an uptrend, right? Higher highs in an uptrend or lower lows in a downtrend, okay? There is higher highs and higher lows in an uptrend, lower highs and lower lows in a downtrend. Okay, so understanding market structure helps you recognize whether the market is trending or consolidating, which will guide your trade setups. Now, in the SMC strategy, it's crucial to identify key support and resistance zones where price is likely to break or reverse. All right. Now, the next component is liquidity zones. All right. Liquidity zones, very important, right? Now, liquidity zones are areas where large amounts of buy and sell orders are placed. These zones are typically found around areas of support and resistance. Okay, those are areas we call liquidity zones, right? They're typically found around areas of support and resistance. Okay, or previous swing highs and lows. The idea is that smart money seeks out these liquidity pools to fill their large orders. Understanding where these liquidity zones are located helps you identify where price is likely to move to next. And then finally, order flow, right? Order flow. Now, order flow refers to the direction in which market participants are placing their trades. By understanding order flow, you can gain insight into the intentions of smart money. When smart money is accumulating a position, they may drive the price towards certain liquidity zones. All right? And by recognizing these patterns, you can predict where price is likely to go next. So now that we know the basic principles of the SMC trading strategy, let's talk about how to actually apply them in your trading. Now, there are several methods to identify high probability trade setups using the SMC strategy. Now, let's just look at a few approaches, okay? A few key approaches. And the first is break of market structure. And one of the first signs that a new trend is forming is when the market breaks a key level of support or resistance. Now, this is a signal that the market is likely to shift its structure. For example, if the market is in an uptrend and suddenly breaks a key support, like what we found happen around here, it could indicate the start of a down trend, right? It could indicate the start of a down trend. Now, by catching these levels, by catching these breaks early, you can enter trades with a strong directional bias. The second we're talking about is liquidity runs. Okay, as mentioned earlier, liquidity zones play a crucial role in the SMC strategy. When price approaches a liquidity zone, smart money will often trigger a large price movement to fill their orders. You can spot these liquidity runs by watching for price action around these key levels. If price starts to react sharply, it could be an indication that smart money is moving in, and that's when you want to enter the trade. Now, finally, market manipulation. Sometimes the market will temporarily manipulate price by creating false breakouts or reversals to trick retail traders. Okay, smart money takes advantage of these moves to fill their orders. Right? For example, we can see what happened around here. This seems like a false breakout because we had a support around here, and you can see that it seemed as if there was a breakout, and then before you know it, there was a reversal back above, and you can see that we actually had a buy trend. All right. So smart money takes advantage of these moves to fill their orders at favorable prices. Recognizing market manipulation can help you avoid falling into traps and make better trade entries when the market reverses in the direction of the overall trend. Now, while the SMC trading strategy is powerful, there are a few common mistakes that traders make when trying to implement it. Okay, let's just go over a few of them so that you can avoid these pitfalls. The first is ignoring market structure. The foundation of the SMC strategy is understanding market structure. If you're not keeping track of the overall trend, you might be entering trades at the wrong time or against the prevailing market bias. So always make sure you are trading with the trend and not against it. Okay. Secondly, chasing liquidity zones. It's easy to get excited when you see a liquidity zone, right? But chasing after these zones without proper analysis can lead to poor trades. Always wait for the confirmation before entering the market. Okay. Look for clear price action signals or a break of market structure before you pull the trigger. And finally, overtrading. The SMC strategy requires patience. Okay. Sometimes the market can be quiet and there might not be any clear setups for a while. Overtrading in these situations can lead to losses, so it's important to wait for the right moment. Okay, only take trades when the market structure, liquidity, and order flow align perfectly. All right. Now, how do you improve your SMC trading skills? To master the SMC trading strategy, it's important and is essential to practice and continuously improve your skills. So here are a few tips. Okay. The first is to backtest the strategy. All right. Spend time backtesting. All right. Spend time backtesting the SMC strategy on historical data to understand how it works in different market conditions. All right. And then it's important to use demo accounts. Before trading with real money, practice your SMC setups in a demo account to refine your skills. And finally, study price action. The more you study price action, the better you will become at identifying key levels and reading the market's behavior. And finally, be consistent. Okay, consistency is key to mastering any strategy. So stick with the SMC strategy and keep improving your analysis over time. All right. The SMC trading strategy is quite a powerful strategy for traders who want to understand the market from the perspective of smart money. All right. By focusing on market structure, liquidity zones, and order flow, you can spot high probability setups and trade with confidence. Remember to avoid common mistakes. Practice regularly and refine your trading skills constantly. Okay, if you found this video helpful, don't forget to like and subscribe to the channel for more trading strategies and tips. Let me know in the comments if you've tried the SMC strategy or if you have any questions about how it works. Thank you for watching, and I'll see you in the next video. Check out my other videos on advanced trading strategies and keep improving your trading skills with actionable insights. Okay, stay tuned for more content and happy trading.